Hello guys, hope you guys are doing well. This is a new video that I'm doing. The company that I have chosen for the analysis today is a great company. It's a monopoly in its own sector. The company name is called Indian Energy Exchange. You guys must have heard about the company, right? Now, telling you a little bit about the company, it was started in 2007. It provides an automated platform and infrastructure for carrying out trading in electricity units and also the physical delivery of the electricity. बहुत ही अच्छा कंपनी है. It's one of its own kind of company. The company is it's a premier energy exchange, right? 85% of the market share goes to Indian Energy Exchange. There are a couple of other exchanges, but the volumes compared to Indian Energy Exchange are low in those exchanges. Hence, Indian Energy Exchange comes out to be a great monopoly share. Uh, it was at one point of time present in everybody's portfolio. It was growing by leaps and bounds, right? If you look at the market segments, let's understand the business of Energy Exchange a little bit. The market segments, it has two different kinds of market segments. First one is called DAM, the day ahead market. It was 35% market share of IEX in H1 of FY26. DAM is a physical electricity trading platform where the participants buy and sell electricity for the next day. So you are buying the electricity for the next, but majority of the demand comes very ad hoc in nature, right? So for example, if you have the electricity supply to your house, possibly you are going to consume a bit more electricity in the morning. ज़्यादा खर्चा होता है मॉर्निंग में, देन एट द इवनिंग में भी ज़्यादा खर्चा होता है, बट ड्यूरिंग द डे इट इज़ अप एंड डाउन, राइट? So possibly you will need more electricity towards the end of the day, so when the evening starts, right? So that's where the real-time market comes in. So the second business of IEX is called RTM, or the real-time market. Again, it was 36% of market share in H1 of FY26. The RTM enables electricity delivery within an hour of the market closure. So power exchanges holds 48 sessions daily with auctions every 30 minutes. Price and trade volumes are set through a double-sided closed auction. So that's how the business of IEX operates, right? Then there are multiple other areas where IEX operates, like REC, renewable energy certificates, energy saving certificates, and also it operates in the term ahead market, TAM. What it offers, the TAM offers, is that the electricity trading for up to 90 days. It's a long-term contract that is going to happen. Then there is something in green market where Indian Energy Exchange is newly getting involved. That's the basic introduction uh, for Indian Energy Exchange. Let me go to this presentation to explain a little bit more about how IEX operates, what are the fundamentals, what are the technicals of Indian Energy Exchange, how exactly it is operating in the market, what are the ups and downs for this particular company. Let's deep dive into the business, the financials, and the future outlook of IEX. Right now, I've gone through the company overview. To add a little bit, IEX facilitates transparent price discovery. It enables the efficient power procurement and operates 24/7 in the DAM and the RTM market. Right, that's basic business. Right, it's a dominant market leadership. So 90% of the total market share in the power exchange go to IEX. 99% of DAM share, 7,000 participants in total. Liquidity attracts liquidity in any exchange. अगर आपका BSE में शेयर का वॉल्यूम कम हो जाता है, then the next day the business is going to be impacted. When NSE opened for the first time, when BSE was already present in the market, that's where the BSE went down in the business, right? Because NSE was coming up. NSE was coming up with a lot of liquidity. It has more cutting edge technology platforms present with NSE, and people are moving towards NSE, right? So that's where the BSE business is going down. So liquidity attracts liquidity, and IEX benefits from a massive network effect there. What is a fundamental analysis? Key three important points that you need to note here is IEX is debt free. This is a platform, right? You host multiple participants, you enable them, facilitate them towards getting the electricity contracts. You are neither having any assets which you are going to use in the business, nor you are giving out anything that is going to be used. Hence, there is no debt here. High ROE, right? The return on equity is above 40%, right? Efficient, superior efficient in the capital allotment, allocation and disbursement. It is asset light. As I told you, it's a very technology first business model. It operates and gives out a platform for the participants to use. There is no physical inventory that it is keeping and giving out to the customers, neither it is receiving any physical inventory into its system. So very asset light in nature, right? And let's look into the fundamentals a little bit. So if you look into the stock uh, P, right? So if you look into here, so uh, let me switch on this, right? So if you look into this, the stock P is around 24.4, right? So mm, right. So if you see the PE ratio, right? The PE ratio is 24.4, right? So and if you look into the other parameters, that as I was mentioning, the ROE is 40.5. The FI holding is also 11.4. The EPS is 5.18. If you look into the debt, it's only 3.7 crore, 74 crore, whereas the market cap is 11.253 crores. Uh, there is a little bit of change in the FI holding. I'll come to this, why exactly this is happening. The PEG ratio is a little bit higher. It is greater than 1. So this indicates that uh, it is a little bit of highly or overpriced. Um, right, so this is one thing that we need to take care of, but I'll tell you why this is a very great business to invest in and what are the different parameters where uh, this is definitely superseding any other share present there. If you look into if you look into the share price, you will see a bigger dip that has happened over the last 3-year period. If you see, right, um, over the little 3-year or 5 period, if you are looking at the highest, uh, the the highest price that we are looking towards is this point, and this is around. If you see, this is around uh, 300 odd rupees. Now it has fallen down to the current price is 126 rupees, right? From 300 rupees uh, high, it has gone down to 126 rupees. Significant fall. We'll come to the reasons why it has happened, right? But the monopoly still stays, right? If you look into the investor holding, you'll see the FIs are holding 11%, the DIs are holding 35%, public is holding 53%, right? The public holding also has decreased over time. If you look into March 2023, the public holding was 60% and now it is 53%. So it seems like this share is changing towards the strong hands. Now, if you look into the balance sheet, right, a little bit, so the sales has been steadily increasing. So it was 100 crores in December 2022. It is gone up to 150 crores in September 2025. So over the last 3 years, it has 50% increment in the sales. Net profit has gone up significantly as well. The EPS also has gone up significantly. So in all the parameters, it has definitely improved. But then the question is why it is going down, and we'll come to that, right? Now let's go to the technical analysis. So there is a little bit of correction of 50% from the all-time high due to the regulatory fears. The consolidation is happening in the zone of 130 to 170. Right now, the share price is at 126. There is a strong support at 120. We'll look into that. The resistance immediate is 180. Breakout will lead to 220. Right. So if you look into IEX charts, right. So the charts, if you see, there is a strong support, very strong support, multi-year support that you can see over here, right? So clearly there is a multi-year support at 120, and it has not broken it. It has always respected. It has respected that in 2021. It has also respected that in 2023. It is also respecting now. If you see, there is a little bit of improvement from 120. It has gone to 126. It is knocking the doors of 120, but not breaking it, right? In the short term, if we look at, there is a significant drop over here. I'll come to this, why this drop has happened when we look into the fundamentals changes that has happened in the stock, right? But as you can see very clearly, um, if we look into what are the different uh, this is the trend line that was going on. But right now, if you look into a little bit of details, the stock is consolidating over here, right? So if I want to drop the parallel channel, you'll see that, hey, the stock is definitely in a sideways movement, right? So it is moving between 127 and 121, and the stock is not going anywhere. Let's look into the reasons why the stock has fallen, right? So what is this all the controversy about, the market coupling controversy, right? What is in it, right? So the Ministry of Power has proposed a market coupler theory, right? A centralized entity that would collect all the bids from the exchanges, and the three exchanges are IEX, PXIL, HPX, and discover a single uniform price. And why this is a threat? Because IEX has the maximum volume. It has traditionally been discovering the price, right? That's the mode of the company. Because you can decide on the price, you would have the maximum volume. A lot of participants will come to you, and eventually you will have the monopoly status. But if this is gone, the price is discovered in a separate unit or the entity, then the mode of IEX is gone, right? That is the centralized threat that IEX is facing right now. It has gone to the court. The court also has recently come out with the verdict. The court has mentioned, the appellate court has mentioned that it is very preemptive in nature on part of IEX to come down and mention the CERC regulation is going to impact its business. It is not. And to the point that appellate court has mentioned that IEX is not the aggrieved, because the order that has been passed is not a mandatory order, but it is an optional order that has been passed. It is neither affecting the business of IEX nor it impacting its profit and top lines, right? So hence it is not an aggrieved entity, and that's why the court case has been cancelled, but with the caveat that IEX can come back to the court whenever this order from CERC is made to be permanent, or it is going to impact IEX's business. The current status is that the pilot projects are being conducted to test the feasibility. The immediate existential threat has receded, but long-term implementation remains a possibility. Right? What are the future growth engines of IEX? Now let's look at where exactly IEX is growing. What exactly are the areas of benefit for IEX? So there are three major areas where IEX is growing a lot, right? The first, Indian gas exchange has been established by IEX. That's called IGX, Indian Gas Exchange, right? It's a rapidly growing market for trading natural gas. It's going to be a huge benefit for IEX in the coming times. The second one is the ICX, carbon exchange. जो carbon exchange होता है ना, it's basically for the carbon credits, right? Trading the carbon credits to help the industries meet the ESG goals. So let's say, for example, there is a company A, which knows that it's going to uh, generate more amount of pollution. So what it can do is that take the carbon credits from a company B, which has made already its ESG goals, and it has already multiple carbon credits in its account, which it can trade to the company A, and the company A can start on its production and can still maintain the overall carbon requirements that is required, right? The third is the ancillary services. It's battery swapping and the grid stability markets, which is very up and coming. This again here, IEX is the only player that is present. Uh, why is IEX robust? IEX is majorly robust because of the network effect that is coming through, right? So let's look at why IEX is. What does it mean by this, right? So in trading, volume begets volume, right? Buyers go where the sellers go where the buyers are, and IEX has that critical mass to operate, right? It's very difficult to get the market participants changing from one exchange to another exchange. It becomes very difficult for their business, becomes quite unstable to move around the exchanges once you are registered to one exchange. The technology Moat. So, a robust and proprietary matching engine that handles thousands of complex bids in milliseconds is a very robust platform that has been built by IEX over a period of time, and it is very reliable in nature for the participants. So, it becomes very difficult for the participants to move out. The third one is the operating leverage. Since the costs are fixed, right? The software and the servers are all present, the platform is already present. The additional rupees spent to get the new participants onto the platform is absolutely nil, right? You can have multiple participants today coming in, joining the IEX platform, start trading on electricity or the carbon contracts without IEX having to spend a lot, right? Then the diversification, that is expanding beyond electricity into gas and carbon, reduces reliance on a single product, reduces the concentration risk, and that's what makes IEX a great business, right? Now here is my thought process. Please take it with a pinch of salt. Consider and consult with your financial advisor before going into this company and investing in it, investing in the shares of IEX. uh, I am not a SEBI registered analyst, hence it's only my advice. So, what is my thought process here, right? Despite the regulatory noise, IEX is a very high quality business. It's a cash rich monopoly. As I mentioned, there is a resistance by the participants to move around in the exchanges, and because IEX has the necessary volume and the price discovery associated, it becomes very difficult for the participants to go otherwise. The market coupling risk is known and is already priced in, and with the new businesses that are coming into IEX fold, I think it's only going to grow leaps and bounds. So what I'm going to do personally is that I'm going to accumulate the IEX shares when it is at a lower price. It is available at the lowest price, multi-year support of 120 rupees. It is right now at 126. So what I'm going to do is I'm going to accumulate. I'm going to long-term hold and play on the India growth story, right? So if you are present uh, till now and watching the video, it means that you are liking it. A like is definitely going to help me. Please share and subscribe, and please mention what are the other monopoly businesses that you want to have the analysis on. What are the different other monopoly stocks that you are holding in the portfolio? Thanks for watching the video, and please continue to support me. Thank you.